Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to help to continue to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you've ever wanted to know how to build rock solid wealth by taking a rebel's approach, then guess what? Today's conversation is the one that you're going to want to stay to until the very last word. I promise. Because you know what? Today's guest is originally from Canada. It actually now calls the United States her home. And she's a strategic financial consultant that teaches, and get this, she teaches independent thinking professionals and small business owners the whole truth about money. And hopefully she's going to tell us a little bit more about what that all means in just a few minutes. She's also the chief chick and executive director of Fanatchicks Care. And she's also the founder of Rebel Rock Wealth. I'd like to welcome to today's show, Lesley Batson. Lesley, welcome to the show.
Thank you, Billy. Glad to be here.
Hey, you know what? I am super excited that you're here and actually got through that whole introduction without kind of fumbling over myself. So that was really, really cool. So I feel very excited, and I am really excited for people to learn so much from you today because you are just really bringing something that I believe is very, very critical for anyone who's looking to build wealth and move forward to learn more about. So I'm going to kind of be quiet here because you know what? People want to know more about you. They want to hear from me so much. So one of the things is, I like to ask everybody the same kind of 5 questions. We'll start with 2 and finish with the last 3, the Going Long final 3. And so help us understand first and foremost, Lesley, where exactly do you live in the United States?
So I currently live in Orlando, Florida. I think everybody in the world knows where that is. If you know Mickey Mouse, you know where Orlando, Florida is. So yeah, I currently live in Orlando. I'm originally from Toronto, lived in Chicago, Illinois for a while, but made my way to Orlando.
Awesome. So you live in Orlando, and that's really weird that someone that was born in a cold weather area has moved to Orlando. And that's kind of like me. So maybe, yeah, we've got a lot in common there. So also too, would love to know, what is the most positive thing that's happened to you in the last 24 hours?
Well, Billy, I would have to say, so I have a twin brother and he has twin boys. And I finally was able to schedule another reading date with one of my little nephews. So because of COVID, I haven't been able to be home, obviously, haven't been able to travel. But he's 6 and he loves reading. And so we have done these Zoom reading dates and I love it. So I was able to finally get another one scheduled since they went back into school. So we hadn't had it since he went back.
Oh, very cool. Auntie nephew time.
Yeah.
So you got to love that. And thank you very much for sharing that with me and the entire Going Long family. So, I kind of started out and I gave a really high level understanding about your story, but you know what, Lesley, can you do us a favor and really give us your backstory in your words? Talk about like some of the different decisions that you have made to get to this point in your journey. And then, eventually we're going to talk about kind of what's next, but bring us up to speed in terms of like your backstory, please.
Sure. So as I mentioned, I grew up in Toronto area, Toronto, Canada. But when I was getting ready to go to school, I have a twin brother. And we both wanted to go away for university. And we knew that our parents weren't going to pay for both of us to go away. So I was very fortunate with my athletic ability to get an athletic scholarship. So I actually accepted a scholarship. That's what brought me down to the US. I ran track. So I had a track scholarship. I ran for 4 years. I got my degree in marketing in College of Business. And as I was wrapping up those 4 years, they said, hey, we'd love to offer you a graduate assistantship, which allowed me to get my master's, my MBA, basically paid for the tuition and most expenses paid for. So I stayed on and did my MBA. So from there, I left, I graduated and moved to Chicago. So I ended up, at the time when I graduated, it was like that whole Y2K, for those of you who remember, we were heading into the year 2000. All these companies were freaking out, thinking that their systems were going to crash when when the clock turned over to 00. So, even though my degree were in marketing and business, they were like, hey, would you accept a position in IT? And so that's what I really ended up doing, was having a career in technology. So I started in the QA space, like quality assurance. I moved into business analysis. I did project management, but I worked in IT for 20 years. 5 years as an employee. I realized after 5 years, I was not cut out for corporate, not as an employee. I think I liked having my independence. So I actually worked at Accenture. That was the last company I worked with or for. And then I just decided, you know what, I can find these projects on my own, which is what I did. So I just started consulting on my own and finding different projects. And that's what had eventually brought me to Orlando. Was when I was looking for a certain project. I was brought in for something at Disney. So that's what first brought me to Orlando, because I was just looking for a short project that would last maybe 6 months, to get me out of the cold winter. Sorry, turn my phone on. To get me out of the cold winter. But it ended up, for me, being a permanent move, because I do not like the cold, even though I grew up in the cold. So I would say a few years ago, so several years ago, I had a great career in IT. It was going well. You make good money and everything, but I wasn't necessarily fulfilled. And I was definitely starting to get antsy, wanting to do something different. And so I was thinking, you know what, I want to start transitioning from, being an employee or, contractor, consultant into investing, so I can start living off my investment income. And so I started listening to a lot of real estate investing podcasts. And when I was listening to one of them, I heard this person talking about this concept of using your whole life insurance to leverage for your real estate investing. And I was like, what? Like, what is he talking about? Never heard of that. I don't even hardly know what whole life insurance is. I'd heard of term life insurance, but not whole life. So I became a little bit obsessed with that. And he himself had a podcast. So I kind of started listening to his podcast. I called him up and I said, I want a policy. I still don't fully get it, but I want a policy. And so I did. I got a policy several years ago. And that's what I've been working. And I realized, like, this is something that a lot of people don't know about. I really, I felt a lot of, I had a huge sense of fulfillment to be able to share this information with people. And it was something that was stimulating. And I was like, okay, this could be a good transition out of my IT career into what I really want to do, which is to have full, complete autonomy over my schedule and still be able to eat and have a roof over my head. So that is where I launched Rebel Rock Wealth. So that was back in 2017. So I basically got licensed to be able to sell whole life insurance. I continued to just study it and understand the product, so that I could make sure that I'm helping people to get policies that serve them in the best way. I work with a lot of real estate investors, but business owners and, just other like high net worth folks, but people who are looking for smart places to put their cash. They're looking to be able to leverage money for investments or to just have for unplanned expenses. Maybe they're looking for it to expand their business. People have different reasons why they need to have liquid funds available when they need it. Instead of it being kind of locked up in like a 401k or an IRA or something like that. So I basically work with people to help them understand, strategies where they can leverage whole life insurance for different needs that they might have in their life.
Wow. Okay. So this is really cool. So you're helping people to be able to unlock funds and be able to understand the whole truth about money. So hopefully people kind of get the connection there.
Yeah.
And that all does start out with, you being able to, you came from Canada, you're having, you had the opportunity to be involved not only in sport, you have your undergrad degree in marketing, you get your MBA, and then you begin to move on to a path where you plan on staying for 6 months, right? You're in the IT, you moved around and things like that. And you wanted to go there for 6 months. I actually thought I was going to be in Europe for a year, by the way. It's now been 20. And so 23 countries.
Yes, I can totally relate.
Yeah, exactly. As soon as you said that, I'm like, oh my gosh, you know what? I can understand this story. I'm understanding a lot. And so then you took action. Like, you heard a podcast, you wanted to understand more about this concept, then you got involved, right? You're an action taker, which I think is great. But one of the things that I do know also too, or that we know, and I'd love for you to maybe tell us a little bit about this, is you got to that point where you wanted to find out more about this, but you made you made it a point to really want to understand money in order to make a more informed decision. I know that's one of the things that's really important to you, but maybe you could help the Going Long family get to know you a little bit more. Like, what is the genesis for that? Like, kind of what happened where you said, like, I really need to understand what this whole money game is all about?
Yeah. So, so yes, I did hear him talking about this on the podcast, but I also, to be honest, at that time, I was coming out of a divorce, or I had been recently divorced, and looking at the situation where I'm like, okay, I've got to kind of not necessarily start over, but you've been planning a path where you had these two incomes and now you have one. It's just you, and you don't want to work till you're 90. So what can you do with your finances? So I went and I saw, I did what a lot of people do. They go online and they start reading blogs and all this stuff. And I'm like, some of this sounds good, but a lot of this sounds like it's maybe not the best fit for me. And I was like, let me just go pay a professional. I said, let me go to a financial advisor. So I did. And I paid a couple $1,000s for that consultation. And what I realized is they basically said the same thing that I read online. And I was like, it wasn't a good fit when I read it for free. It's not a good fit when I paid for it. So for me, what I realized is I did not want my money locked up in 401ks and IRAs. I did not want to only be I didn't want to only have to rely on the stock market to invest. It was just, I felt like there was so many just sort of cookie cutter type of, just advice that was given. And it felt like it wasn't like the full picture. And so when I heard the gentleman talking in the podcast about whole life insurance and the different benefits, I was like, okay, this seems like the right fit for me, because, maybe you can call me a control freak, but I really like to be able to have full control over my money. And I think that when we are constantly told to put our money into these qualified accounts, which are, basically IRS approved accounts, so realize you're actually giving your money to the IRS, but, and they're just holding it for you in these buckets. That to me, I didn't like that feeling of that lack of control. I didn't like the fact that, okay, great, we're going to allow you to defer taxes today, but if you actually want to access your own money, you're going to have to pay a 10% penalty. And oh, by the way, after 20, 30, 40 years that money has grown, you're going to pay much more in taxes than you would have paid if you had just taken the taxes up front. That to me did not make sense, right? And I think it didn't make sense, but also most of us just kind of go along with it because it's what everyone tells us to do, right? Just put your money in these types of accounts. And it didn't sit right. So for me, I guess I'm a critical thinker, and I was just thinking, if I follow this path, it's going to take me a long time to get to the type of independence that I'm looking for, and I didn't want to do that.
No, and so and I love that you share that with us, right? And because it's one of the things that also helps us to understand, when you talk about a life event that you're going through, that you see, you already something wasn't kind of making sense. You go through a divorce and you realize, okay, listen, now I'm having the opportunity. So rather than saying, look, I'm going to collapse and I'm not going to do this, you really looked at it as the opportunity to say, okay, look, I've learned a lot up until this point. Now, how can I go and gain more control, right? And for someone who likes control, and I'm like that too, it probably was I'm sure it was one of the opportunities to say, okay, look, I'm going to go ahead and make the most of this situation, and I'm going to make sure that this kind of situation doesn't happen again. Next time it comes, I'll be better prepared, right? Or you won't get into that kind of financial situation again. And so I'm sure as a result of that, you start to look at things and you look at different values, right? And I'm just going to talk about a couple, like things that are talking about thinking independently, being transformational, being understood, and taking action. Now, I know that these kind of core values resonate with you. Can you tell me why these are some of your core values?
Well, I just, like I said, I'm one of those people who I don't believe in just following the herd to follow the herd, right? I think we all need to do a better job of just making sure we understand why we're taking the actions that we take. We need to be mindful that, marketing messages are not education, right? So just because you hear something repeatedly in a smart little jingle or in a funny commercial, that does not mean it is good financial advice. So for me, which is, I guess, where the rebel comes from in my company name, Rebel Rockwell, is I want people to just, get informed, and I'm not saying you have to do everything that I advise you to do, but I feel like once you have that information, you can make an informed decision about what you want to do next with your money and or in any other situation. And once you can make that decision, you're much more empowered. And when it's time to take action, you're not as hesitant. You have a lot more confidence in those decisions that you're making. There's another thing that I talk about, and I call it the 6 major wealth destroyers. So one is taxes, which we all know about. We all feel the pain of taxes. But you want to be mindful of taxes. So like I just touched on, does it make sense to pay taxes today at one rate? Or does it make sense to wait and pay taxes later at a potentially higher rate on a higher amount of money, right? For many of us, well, I would say if you're in America, for the crowd in America, it is highly unlikely that taxes are going to stay at the same rate that they are now. I mean, even with Trump's tax plan,
I'm sorry,
rates are already scheduled to start increasing. And since we've had COVID, all these stimulus, all this money has been printed. It has to get replaced somehow. The government continues to spend a lot. So just like with you and your own household, if you have a credit card and you keep charging to that credit card, at some point, you're not going to have any more room, right? Even you're barely going to have money to make those minimum payments. And that's kind of where we are right now as a federal government. So at some point, you're going to have to start to get more money in to pay that bill. And unfortunately, I can only assume it's going to be through taxes. So I wanted to make sure that I had money put into places where it's protected or sheltered from that type of influence. If your money's in 401ks and other things, you're a little bit more exposed to that. One of the other wealth destroyers is inflation, right? So again, we keep printing all this money, we're inflating the money supply. So it's going to cost a lot more, say even 5 or 10 years from now than it does today. If we just look at healthcare, just health insurance or healthcare on its own, the cost of health insurance, what it was 10 years from now from what it is today, right? And the cost of healthcare. Well, imagine what that's going to be 10 years from now. Imagine what it's going to be when you're older, when you really need, when most of us start to experience health events when we're older. What is the cost of healthcare going to be at that time? So what are you doing today to make sure that your money is keeping up with inflation, right? Keeping it sitting in a bank account isn't going to do it, earning 0.1%, or, having it in managed accounts where this fee that's being applied, which is the 3rd major wealth destroyer, are ongoing fees. If your money is sitting in some type of managed account, even if it's a 1%, like your advisor is saying, okay, well, I just charge you 1% of your assets under management, that 1% or 2% can really erode your growth over time. It's hard to see because you feel like 1%, that's nothing, 2%, that's nothing. But that really, over the course of time, especially if it's just a 2% management fee over the course of 20, 30 years, can erode your growth by almost 30%. And we don't realize that. But when I show my clients the numbers, they're like, whoa, very, very scary. So we've got taxes, we have inflation, we have ongoing fees. There's also what we call opportunity costs, right? Where you have made a decision to, spend your money or invest in A when you could have spent it on B. That opportunity cost is the difference between the best case scenario for that money and what you chose to do. And for many of us, we don't think about that. And so when I talk about the whole truth around money, it's not just about life insurance, but understanding how that works. And something as simple as in the US, where there's always this discussion of a 15-year mortgage versus a 30-year mortgage. Well, here in the US, they might offer you a 15-year mortgage at like 0.25% less, lower rate. And so people are like, ooh, that's better. I can pay it off faster. I'm not saying that that's not true, but what I'm saying is there's an opportunity cost to that. Your mortgage payment is going to be much higher for a 15-year mortgage than it would be for a 30-year mortgage. So you're rushing to put this money into a brick home. I don't know the last time that you were able to take a brick from your house and take it to the grocery store, or remove your marble countertop and take it, for a vacation. Like, you can't do that. So you really want to keep as liquid as possible. So there's an opportunity cost for kind of locking up your money. And also in the US, for a lot of people, especially when they get to their senior years, the only write-off you have is your mortgage. Right? So you'll see that in the end, if you were to work that money for that if that during that extra 15 years, if you were to keep your money more liquid or work it or invest it and get a higher rate of return, it might really be a better outcome for you than, trying to hurry up and pay off a mortgage in 15 years. Now, if you have a 30-year mortgage, you can still pay it off sooner. No one's saying that you can't, but you're not obligated to. And your money is, you have the ability to do more with your money. So anyway, so opportunity cost is a fourth wealth destroyer. And then the other two are what I call knowledge and mindset, belief, and health, right? And so it could be your physical health or just your mental health, spiritual health. The two kind of go together. If you are unsure, lack confidence, if you're, again, looking at commercials as financial advice instead of talking to professionals and, kind of using your own critical thinking when you're reading about things, that's going to influence your ability to make decisions about your finances. And so for all these different reasons, you want to make sure that you are applying things to your portfolio that counter all these potential wealth destroyers.
So, and when you can talk to us about those, the wealth destroyers, like you said, the health, the knowledge of benefits, the knowledge of beliefs, the opportunity cost, you talked about the ongoing fees that can, when you're doing 1% over time versus just sitting it once and it grows the rest, the capital can grow itself. You've got taxes, which is probably, I don't know for sure, but one of the biggest expenses that we'll pay in our entire life, and just inflation. And yes, at the rate that money is being printed by the Federal Reserve and most of the central banks around the world. These are things that just slowly gnaw away at your wealth. And so I appreciate you helping us understand those 6 wealth destroyers, understanding, how you've come about with these 4 values. And, I think a lot of times, and I know a lot of people that are in similar to you, that are in high paid roles, like really busy corporate careers, small business owners that also, they know more about like this happens in my role. Like, so a lot of people that are in software sales, and they can tell you every single thing about the opportunity, like the deal that we're working on and the client and their strategy and what they're doing and the margins and why we should get this and why we should get that. And when I ask them, look, how are your finances coming along? How is your portfolio performing? It's like a deer in the headlights. They have no clue. Like, don't even know. And it's one of these things that surprises me, that there's so much more clarity and understanding of what's going on outside in your role, in your job. And I think it's good to have that, but then to have very little to no understanding of what's happening in your own personal finance is one of these things that is just, to me, it tells me a lot. And I would just be curious as to, you deal with a lot of high paid professionals, a lot of business owners. What's your experience there?
Well, I mean, you're right. You said it, really. I mean, the truth is that we are not taught financial literacy. We are not taught how to manage money. Just because we are smart and accomplished in our careers or our businesses does not mean that we know how to manage money, right? It's like we take that for granted. And for many people, they will not seek that help because for whatever reason, right? They may be embarrassed or whatever is the case. Now, for others, they will go seek that help. And like I said, they may reach out to one of the type of advisors who I reached out to, and they might be put on a path that is not necessarily, to their greatest advantage, right? It's going to be great for their advisor. It's going to be great for Wall Street. It's going to be great for the IRS, but not necessarily great for them. So it is really a true lack of understanding and just a lack of education around even just some of the basics around money.
And so this sounds like this is something that you see quite frequently then with the people that you are interacting with. And a lot of times, you don't want to say that I don't know something, because if you're out and you're in a high performing role, you're making a lot of money, you've got a successful business, everyone thinks that you know every single thing. And unless they feel comfortable, they're not going to say, hey, look, you know what? I don't actually even have any idea. And knowing that you have those kinds of conversations, I have those kinds of conversations, not with everybody, but more and more people every single day. And so one of the reasons that I think it's important for you to be here is also to share your knowledge, right? And so you and I have had a chance to talk, and we explored these concepts of the infinite banking concept, right? It is what a lot of people will call it. And I would like for you to help to educate the entire Going Long family, just in a high level, because
Yeah.
this is part of one of the reasons that people are here watching us or they're listening to us, because they want and they are seeking the education and doing it in the format that makes the most sense for them. So you and I are going to take advantage of this opportunity, or more importantly, you, to help to educate us, and especially for all those people that are sometimes a little bit shy, to understand, like, what is this whole thing of like the infinite banking concept? How does whole life insurance play into it? And like just at a high level, so people can kind of understand that to grow wealth and be able to combat some of these different wealth destroyers.
Yes, absolutely. Yeah. So I know people are probably like, I don't get it. What's the connection between whole life insurance and this? So, excuse me. So let me just start with this. Infinite banking is a strategy. Okay. It is a strategy that you can apply using different tools. But the most effective tool that you can use for infinite banking is a properly structured whole life insurance policy. And now this, I'm speaking specifically to people in the US and Canada, because I don't know how they are structured in other countries. But if the policy is structured a certain way, it's going to allow you to basically dump cash into it, and it serves as your savings account. It's where you would hold your capital. So if you are just looking for somewhere to put your money and you want it to, grow effectively, grow safely, you want the principal to be safe, you want it to be liquid, you want to have access whenever you want it, this is the vehicle that I encourage people to get, because most of us, and again, as I talked about through commercials or lack of education, our understanding of life insurance is, okay, this is what kicks in once I die. We have a very limited understanding of how we can actually use life insurance when we're alive. So number one, if I were to just touch quickly on the wealth destroyers, right? So we talk about taxes, how it helps you with the taxes. Again, if you were putting the same funds into a policy over time, as opposed to putting it into like a 401k plan or some type of, qualified plan, yes, you're going to pay taxes the year of that year to make the contribution. So they're after-tax contributions, if you want to say it that way. But then it's growing essentially at a tax advantage for a lifetime and beyond, right? So you have that initial tax advantage. From an inflation perspective, most of these policies, and especially again, if they're set up the right way, they're growing anywhere from 3 to 5%. The IRR could be, you could kind of equate it to be about 3 to 5% annually. So that is much more than you'd be earning in a savings account, in a CD, in a money market account, and you wouldn't have the limitations as you would with those. So from an inflation perspective, it's helping you to compete or to beat inflation. From a fees perspective, there are costs, right? There are costs built into a life insurance policy. They're not just granted for free, but the costs are upfront. So when you are working with, someone like me, you're going to get what's called an illustration. You're going to see how your money is projected to grow over time if dividends are declared. And so you're going to see where those costs come out upfront. Now, there's three main costs. The three main costs are administrative costs, just like any company has operating costs. So those come out. The second would be what we call the cost of insurance. So for example, Billy, if you were to get a policy today, let's just say it's a policy for $1 million, you made a premium payment today, and then God forbid you got hit by a truck tomorrow and you died. Okay. You would have only paid in $1,000, but now the insurance company has to pay your loved ones $1 million, right? So for those first few years, they're kind of building up for that, that cost of insurance. So that's what's coming out. The third thing would be any commissions that are going to the agent. But those are costs that come out up front. And then once they're out, they're done, right? It's not like an ongoing thing that's, going through the lifetime of that money. So we've covered taxes, inflation, fees, and then opportunity costs. So with your money growing in a whole life insurance policy, there's a portion of the policy called your cash value account. This is what we refer to as like the living benefits of your policy, one of the many living benefits. So again, it's like a cash reserve or, like a savings account. And so you are able to leverage that money to use for investments or purchases, illnesses, whatever you need to pay for. And you do that not by withdrawing, but by taking a loan. And so people will say, oh, well, I can take a loan for my 401k. And yes, you can. You can take a loan, but keep in mind, there's a maximum amount that you can borrow from your 401k. They will determine what your repayment schedule is. If for some reason you don't finish paying it back in the time that you have terminated employment with that company, you are going to have to pay the taxes on the remaining outstanding balance and the penalty, because it's going to be considered a withdrawal at that point. With a policy loan, if you take a loan out of your whole life insurance policy, what you're doing is essentially using the leverage, using the equity in your policy. So the cash value is looked at as like equity. So think of it as when you have a home and you take out a home equity loan. If you have some equity, the bank may lend you against that equity. It's the same thing with your whole life insurance policy. If you've built up cash value, the insurance company is willing to lend you money based on the amount that you have in your cash value. And they will charge you a rate, like they do have a borrowing rate for you to borrow that money. But you determine when you want to pay it back, how much you want to pay it back, if you pay it back. Now, of course, I always encourage people to pay it back because you're continuing to build up the money in your cash value. So each year when your interest is paid, you're going to pay more money. So I encourage you to always make that pay back your loan so you have more money available for the next deal. But the thing to keep in mind is that you have the ability, the reason that the insurance company gives you that type of flexibility is because they know that, worst case scenario, they just have to wait for you to die. So whether that's 10, 20, 50 years from now, they know that they'll get their money back. So they don't put any type of rules around how, what the money can be used for. There's no application process. There's no credit check. It's really literally, you pick up the phone, you call the insurance company and you say, I'd like to take a loan. And usually within, I guess depending on the company, it could be anywhere from 3 to 10 business days, that money is in your account. So it's a very simple process. And because your life insurance policy is a personal asset, it's a contract between you and the insurance company, it's out of the purview of the IRS. It's, they don't have their little grubby fingers in there. You have complete autonomy as to how you use that money. And so,
so would that be like a privacy thing? Like am I understanding that part correctly?
Yes. So it's a private asset. So,
okay.
Yes,
so
exactly. Yes, exactly. So because it's a private asset, you can, you don't ever have to borrow. You don't have to ever take out a loan. It will grow on its own. But when we talk about the infinite bank, you just get back to that concept. What we're doing is saying, look at how banks make money, right? So today you deposit $1,000 into the bank and they say, thank you for letting us hold your money. In return, we're going to give you 0.1%, or let's just say 1% interest in return. And you say, thanks for the 1%. But then they turn right around and they say, oh, would you like this credit card at 15%? Or would you like this, business loan at 20% or 10% or, whatever rate? So they turn right around and they use your money. They leverage your money to sell or basically to create other products and to get money back at a higher rate of interest. So it costs them 1%, but they make maybe 4% on your mortgage. Maybe it's 10% on a business loan. Maybe it's 20% on a credit card. So that is like an exponential return on money, right? And so we're basically saying you can do this yourself. If you want to, let's say, you want to purchase a home or make an investment. Let's just say you want to make an investment.
If I want to buy a car.
Okay, yeah. So let's say you want to buy a car. Let's say the car it's a $50,000 car. Now, the rate that you would get from the insurance company. So I think of one of the companies who I work with, their rate is 4.4%, let's just say. Now, it's very possible that you can finance that car at a lower rate with the dealership. However, in some cases, you may not, depending on what your credit is like, right? It's not unusual for people to pay 5, 6, even 8% for a car loan. So what you could do is basically borrow the money from your policy, use that to essentially, buy the car outright with cash, and then you start paying yourself back. And you borrowed it at 4.4%, but you'd pay yourself back at 6 or 8 or, some other, maybe 9%. So not only are you paying back the loan, but you're also stuffing more money into your cash value. So again, that's more money that can earn interest for you. And when dividends are declared, that's even more money. That's, it's growing by even more money.
And so, and I wanted to intentionally use a an automobile because it's something that I would absolutely never do, right? But that's just me. But it just me. What I wanted to help everybody to understand is that it depends on what it is that the individual wants to take the cash out against, right? So whether it is an investment opportunity, it is something that is consumption, you're trying to fix your home. I just wanted to make sure that I understood that correctly, because there may be questions that are going on in other people's heads as they're running on the treadmill and stuff like that.
Yeah, no, that's a great point, because yes, it could be, so yes, car purchases, maybe you have to buy new appliances for your home. Maybe you're paying for your kid's wedding. Maybe you're paying for college. These are all reasons that people leverage their policy. So especially with, here in the US, with the cost of college continues to increase, and they may have been encouraged by their advisor to put money into a 529, which again is a government qualified plan, but there are restrictions, right? You can put money in there, but it's limited to how, there's rules around how you can use that money. But if you just have that same money in your policy, you can use it to, pay for the kids' school. And it's a great lesson for them, because you can pay, but then you can have it where after they graduate, they can start paying you back, right? And all that money that you borrow to pay for their education, your cash value is still sitting there growing, right? It's not like, say, if you borrow from a 401k plan, when you take out that loan, your balance actually reduced by that amount. In your cash value, with your whole life policy, your balance does not reduce at all. So it's continuing to grow, and you have that uninterrupted compounding. And that's what's happening within your whole life insurance policy. So that's the huge, huge benefit that you get, that you can use those funds for any reason at all, pay yourself back, or have your kids pay you back, and still be able to continue that growth.
So, I know some people are probably thinking to themselves, well, yeah, this all sounds like way too good to be true. I'm going to try and simplify this and put it in my own words, just to see if I've understood this. So in essence, what you're telling us with this infinite banking concept is that there is a tool that is used, which is whole life insurance, structured in the right way, that I can put in one currency, whether it's, we'll use dollars, right? Because this is a North American thing. This is US. So US and Canada. So I put in $1, and when that dollar goes here, I can then actually borrow against that dollar. So that dollar goes somewhere else. I can use the second dollar in something, whatever I choose to do, because that is an agreement between myself and the lending institution, or the insurer, excuse me. And at the same time, the original dollar is continuing to grow, because it's always sitting there. So I've actually multiplied the same dollar, and I'm using it in two places. And when I pay the second dollar back, when I replenish it, if I'm paying back more, then actually the cash value has increased.
Exactly.
So not only do I split that dollar again, and then I can use, okay. So that is, and so this is what I think is probably the most powerful concept, right? Because we talked about the wealth destroyers, and one of the reasons that each and every one of you are here is because you want to continue to understand how not only are you maintaining your wealth, but you are building your wealth. And also, the concepts that Lesley is sharing with you right now, these are really the concepts, like not advising you on anything. We're just sharing like what has been working and what is working. I think one of the things that Lesley, that I'm sure you would be happy to do is really talk to individuals, like to understand what their real situation is, because there's a lot of different things that can come in. But I think I want us all to recognize the fact of the matter is you can use $1, you can split that dollar, you can have the original dollar growing, and then when you're paying back the second dollar into the first dollar, when you pay back more, or when you pay back more, then you can borrow against that more, which I think is just something that all of us here at the Going Long podcast really want to know. We're glad that we do know. And I'm sure people are like, oh my gosh, I need to find out more about Lesley. This is really cool. So hopefully so was my understanding correct?
Yes, absolutely. It is literally a rinse and repeat, right? So instead of when you use that dollar, like let's just use your car purchase example. If you had $50,000 cash and you just paid $50,000 cash, that money's gone, right? You used it for what you wanted for it, but it's gone. If you were to just leverage that money, your money is still there growing, as well as you were able to get that benefit of purchasing the car. And yes, you're going to pay yourself back over time, but that $50,000 was never lost. And so it's whether it's a car purchase or again, like an investment, I always tell people, even when you're just thinking about it from an investment perspective, let's just say that investment went way left. If you sunk in $50,000 and then you lost it, that's a horrible feeling. But if you had borrowed $50,000 to put in and then you lost it, well, at least that original 50 is still there growing and compounding uninterrupted, right? You may have to, pay yourself back and, replace that money, but you didn't lose it. And that's, to me, one of the biggest advantages for investors or business owners, or just people who are looking to have their money parked in a smart place, because you have so much autonomy and so much flexibility.
And so the cool part is because, as you know, we love doing this long distance. So you can literally live here anywhere in the United States and Canada to be able to help with your future investments, or anything else. It sounds like that you want to be able to do. I've not done this before, but I'm going to ask you that maybe we should probably set something up so we can talk to our Going Long family so they can understand a little bit more. Cause I'm sure people are like, oh my gosh, this is like, this sounds unbelievable.
And I can walk through an example so they could see, what it could look like. Yeah.
Okay. All right. Well, I think we probably want to do something like that then. But you know what? Here's the thing, Lesley, there's this whole part of the show, that the conversation, which is the Going Long Final Three. And the thing is, like, I never ask anybody, because we're now at that time, but I never ask anybody the Going Long Final Three unless they tell me, in this case, it's unless you're ready for me to ask you the Going Long Final Three. So are you ready?
I'm ready. Bring it on.
You were born ready. All right, here we go. Cool. And so we'll do this lightning round style. We started over on your side of the pond in Orlando, in Mickey's house. And so now I'd like to bring it back to this side of the pond, which is over here on this side of the Atlantic, and help us understand, what is your favorite European city, either that you visited or still on your bucket list to visit?
Oh my gosh. So Billy, I have not had a chance to see a lot of Europe. I've been to London twice and I loved it. And it did not rain either time I was there.
Are you sure? Are you sure you were?
People never believe me, but I swear, I've been there twice. And it was.
You were there. You were there in that week in July. Were you there that week in July each time?
Exactly. I went there once in June. It was beautiful, warm, sunny. I was just like, this is London. I was shocked. I thought it was going to be depressing. And I was there in November. I was doing some work for a company out there, and it was cool and kind of, but it wasn't raining. So I loved London, but there's so many other places in Europe that I want to see.
All right. Well, we'll take London. So we'll take London, which is good. And I spend a lot of time in London, so I really do like it, and especially when it is that like 2 or 3 sunny days a year where it's like amazing. Everybody's out. Yeah. It's a great time. So all the successful people that join me week in, week out, like everybody that's successful has this whole thing in common, which is actually having only made one mistake in their entire, get it wrong every single time. So the thing is, all successful people continue to have learning opportunities, failures, mistakes, things like that. And the common thread is understanding what happened in that moment and really taking a lesson away from it. And so I would love for you to share with the Going Long family, what is the one lesson that you would pay forward from a learning opportunity or mistake that you made in the past?
Well, I would say there was a period when I was working a lot, and so I wanted to start to build so I could start working my way out of the rat race. I partnered with someone who we were going to do these different business ventures. I was kind of the financial partner. He was sort of the operational partner. Let's just say it didn't turn out. He took a lot of my money and I never got it back. So I would say, if you are planning to do that, make sure that you vet your business partners. Just vet, period, the people who you plan to do business with, because just because they have a charming smile and they say all the right things doesn't necessarily mean that that's the best fit for you. So just be mindful and be diligent.
Love that. So vet your business partners. Don't just go for the smile. Actually do your due diligence, ask the tough questions, do all that stuff. Love that. And you know what? So I guess this brings us to the very last question, which is, and I know this is something that you really like a lot. It's the whole thing about being able to feed the mind. And you've got a number of books there behind you. And so I hope everyone is watching the video version of this. If you listened, then you need to jump over to the video version anyway. And so what one book would you recommend to the Going Long family?
This is so hard, Billy. Hard question to pick one book. But I'm going to say it's when I just finished. I have a book club with my company, and we just finished reading What Would the Rockefellers Do? It's by Garrett Gunderson. And I encourage anybody, I mean, anyone really, doesn't matter what country you live in, but I think specifically if you're in the US or Canada, to read it. It definitely just helps you think differently about your money, and how you want to set up generational wealth for your family, for generations to come.
Okay. All right. Love that. What would the Rockefellers do? Listen, you know what? I'm going to have to remind us, but just really quickly, because I don't normally do this, but I know that you also have a nonprofit, Fanatchicks, which we talked about really quickly. So maybe you could just talk, because I know that that's something that's also important to you, being able to give back. If you could talk to us about that really, really quickly, that would be awesome.
Sure. So Fanatchicks Care is a nonprofit that I started several years back, and it was really to help get young girls more interested in being active and exposing them to sports, so that particularly here in the US, so that they could have an opportunity for a scholarship, to help them, get to school, get to, a scholarship for education. So it's really a program where it's about developing self-esteem, especially with young girls. I mean, in today's world, they deal with a lot of different pressures. So it's really kind of an esteem building program, a physical health type of program, and ultimately hoping to lead them to better opportunities in their future.
Awesome. So thank you very much for sharing that, Fanatchicks Care. And we'll include that in the show notes as well, so people can find out more about what you're doing there. So yeah, just really awesome conversation. Lesley, I want to keep talking to you forever and ever and ever and ever. And so you've really shared so much with us, from, being able to move to a new country, have an opportunity, make the most of the opportunity that we were there, shared about a life moment that really helped you understand that it was about understanding more about money. And then from there, being able to, be influenced by what you were listening and taking into your mind. And beyond that, also saying, hey, listen, this is something that resonated with me. You took action, which I think is fantastic. And by taking action, you've now found and are building this amazing platform, which is helping people to really understand the whole truth about money. You talked to us about the infinite banking concept, and really one of the major tools there, when structured properly with whole life insurance, that can help people to combat those wealth destroyers that are out there, to really have more control over your financial life, which gives you ultimately better knowledge and also health, which is one of the things that we talked about. And so I know that so many people are like, oh my gosh, I want to find out more about Lesley. How can I get in touch with you with all this kind of stuff? So help us understand, what is the best way to find out more about you, and also what you're doing at Rebel Rock Wealth. Please let us know.
Mouthful. Yes, but the best way to reach me is just go to my website, rebelrockwealth.com. From there, you can link to my different socials if you'd like to follow me there. You can join the book club. You can schedule time to meet with me. I offer free discovery calls. So best way to reach me, rebelrockwealth.com. All
right, perfect. rebelrockwealth.com. And be able to find out more about you, contact you. And I would recommend everybody in the Going Long family to take Lesley up on her offer, and to be able to do that. And like I said, I think that one of the things that I'm going to chat with you about is how can we do something to really help the Going Long family find out more on a kind of just our community and things like that. So stay tuned, everybody. And so, which will be cool. So listen, Lesley, I just want to thank you from the bottom of my heart for investing time with me and the entire Going Long family today. So thank you very much.
Thank you, Billy.
All right.
Glad to be here.
All right. Awesome. And just a couple of quick closing words for the Going Long family. And once again, thanks so much for investing your time with Lesley and I today. It wasn't just amazing, the information that she just gave you, and is really helping you to think about how you can go out and fight against these wealth destroyers. You have a very unique opportunity right now. Share today's episode with at least 2 or 3 other people. And when you do that, you have the opportunity to make such a positive impact on those people that are like-minded like you. And you can also attract them to the Going Long family. And guess what? Our community continues to build with other like-minded people. We can share, we can grow together, which is phenomenal. So, and I also know one of the things that Lesley and I would love is for you to leave your honest review of today's conversation. Like, what did you love about the conversation? What would you love to hear about in the kind of thing that we're going to put put together for you. And also too, are there things that we didn't talk about that you really want to know about? I know Lesley and I would both appreciate that. And like I said, leave your honest review, and because that's something that helps us all. And I guess from there, I'm really excited to welcome you back on the next episode and the next conversation. And until then, go out and make it a great day. And thank you very much.
Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.